Hello, and thank you for joining us today. This is Alan Brockstein, and I want to take a few minutes to introduce myself and explain why we're hosting these webinars at New Cannabis Ventures. But first, a quick disclaimer. None of the content within this webinar should be construed as investment advice. New Cannabis Ventures is not an intermediary, broker-dealer, investment advisor, or exchange, and does not provide investment advice or investment advisory services. No securities are being offered in this webinar, and we have no access to non-public information. This webinar is not a place for giving or receiving financial advice, advice concerning investment decisions, tax, or legal advice. Please note as well that Kush Bottles is a client of New Cannabis Ventures. We host a dedicated page on our site that helps visitors learn more about the company, the fact-based, data-driven Investor Dashboard. Investor Dashboards quickly tell the official story and financial status about the company. Additionally, at the time of this recording, 420 Investor, the service I operate that covers publicly traded cannabis stocks, may have a position in a model portfolio in Kush Bottles. All right, now that I have that out of the way, I want to take just a minute to tell you about New Cannabis Ventures and why you've picked a good venue to learn about Kush Bottles today. Many of you probably know me by now, but for those who don't, I began my career in investments in 1986, working with several large institutions along the way, and have been covering the cannabis industry since early 2013. At that time, I was working as an independent research analyst with several different institutional investors, as well as running a couple of research services for individual investors and blogging at Seeking Alpha. I founded 420 Investor in late 2013, and it remains the largest community focused on due diligence for publicly traded cannabis stocks. Joel and I started New Cannabis Ventures 2 years ago because we wanted to address a void in the market. While the evolution of the legal cannabis industry is exciting, it has also led to a lot of noise in the media that can make it difficult to research the real companies. At New Cannabis Ventures, we aim to serve as a filter, saving time for our readers trying to stay on top of all the developments. We publish only business news, trying to spotlight innovative companies and important industry developments. No fake news at New Cannabis Ventures. We work with a select group of companies, both private and public, like Kush Bottles, who are looking to raise their awareness with investors, strategic partners, B2B customers, and the media. You can visit our featured page at www.newcannabisventures.com to learn more about Kush Bottles and our other clients. I've been following Kush Bottles since it began trading publicly at the beginning of 2016. CEO Nick Kovacevich joined the company in 2014 and took it public through the Form 10 process, avoiding a lot of the potential mishaps associated with reverse mergers. This isn't Nick's first entrepreneurial effort, as he and Kush Bottles co-founder Dallas Mbimbo exited a college moving and storage solutions business with a sale to a moving company, and also created BigRents.com, an equipment rental company located in California. I know Nick will be covering the recent transformational acquisition of CMP Wellness, but it's worth noting that another big acquisition, its Colorado operations in 2015, proved highly successful. Nick and his team have now built a company on track to more than $25 million annual revenue run rate. One final introductory remark is that Kush Bottles was the first cannabis stock to get coverage from a major U.S. investment bank, Cowen & Company. Analyst Vivian Azer covers the company and has a buy rating with a target of $4.50. Kush Bottles has a fiscal year ending in August, and Azer's estimates for FY18 are $46 million in sales and EPS of 5 cents per share. We will be getting into the presentation now. Nick will be walking us through the Kush Bottles investor deck, and then we will take questions. At any time during the presentation, you can type a question. There are a lot of attendees today, so there's a good chance we won't get to all the questions, but we'll try. Nick will answer as many as he can at the end of his prepared remarks. So now, please welcome Kush Bottles CEO Nick Kovacevich, who will talk to us about Kush Bottles and its prospects. Hello, Nick.
Hello, Alan. Thank you for having me.
It's great to be here. Let's get started. I'm going to change the slides, and I'll be running those.
Okay. Well, today we'll do the presentation on our company, Kush Bottles. Thank you, Alan, for the wonderful intro, and thank everyone for attending and tuning in for this presentation. I appreciate the opportunity. We'll do a quick slide of our disclaimer, and then we'll move right into a little bit of the market analysis. So the cannabis industry is taking off. It's no secret. We look at some of the projections out there showing that the industry could be well over $40 billion by 2020. We have an expected rise in not only cannabis itself, but also the adjacent verticals that are contributing. And we know that cannabis is creating jobs in the U.S. economy more so than any other industry, because of the fact that it's being regulated by the states, and all of the economic impact is therefore confined to the states and to the United States. There's no international importing and exporting that happens, and what that means is that it creates more jobs, creates more tax revenue, and ultimately is going to be a huge economic force in years to come. So we look at some of the key market drivers. Obviously, increasing legalization. There's more than 50% of the states, I believe it's up to about 30 now, have some form of legalized cannabis. Most of them are medical, but we do have 8 states that currently have adult use laws in place, and the District of Columbia. Last November, we saw a historic election for cannabis, as 8 out of the 9 states that had ballot initiatives passed their programs, including a medical program in Florida that needed over 60% vote to get passed and approved, and that occurred as well. We had 4 states vote in for adult use last November. Those 4 were California, Nevada, Massachusetts, and Maine. We look at those states, those 4 being the most critical states over the next few years for growth. Obviously, California is a huge economy, 6th largest economy globally. Nevada, big tourism market, obviously a large economy around gaming there. And then Massachusetts as a key driver for opening up the Northeast, as now we'll have a lot of other surrounding states residents flooding into Massachusetts to purchase their cannabis legally. Keeping all that tax dollars within the state of Massachusetts should be a big motivator for the surrounding states such as Connecticut and Rhode Island and New York to get in the game, so to speak, and up their ante and be able to recognize tax revenues that go to their schools and their pension programs. So a lot of exciting stuff happening on the increasing legalization front. Also, the federal initiatives, right? We have now a cannabis caucus in Congress. Different senators and congressmen have come forward now looking to progress the federal laws. We still have a Rohrabacher-Blumenauer appropriations rider in effect, which limits any federal funding from going to be used toward states that have legal cannabis programs and businesses that comply with them. So a lot of good stuff happening at the federal level, even though the Trump administration is not likely going to be a huge proponent of adult use or recreational cannabis. It actually creates a good environment for businesses, especially smaller businesses, that now have the opportunity to grow their businesses state by state without having to face billion-dollar balance sheet type competitors who currently are unable to get into the industry because of the fact that it remains with some federal illegality. So it actually creates a unique environment for smaller businesses. And the most important thing is the shifting public opinion. We now have polls showing that well over 50%, up to 60% of people do support adult use, full-blown legalization. And we also see polls that show almost 100%, in the high 90s percent of people support legalizing for medical purposes. So as we've seen with a lot of other controversial issues, once public opinion gets to a certain point, that usually results in policy change. Looking at the company and doing a brief overview, Kush Bottles, Inc., we are a dynamic sales platform that provides products and services for both businesses and consumers in the cannabis industry. When we look at our platform, we can segment it into really 2 different segments. One is our core business and our primary business, the business-to-business or B2B aspect. We're a trusted partner for cannabis businesses. So we work with the stakeholders, the key stakeholders and license holders in the legal cannabis markets. So these are either legal cannabis growers, legal processors or extractors, infused products makers, and also legal dispensaries or retail storefronts. We have a broad array of products, almost over 2,000 SKUs that we carry, that we service and provide for these clients at all different points on the supply chain. Our products range from various packaging products, stock packaging, blank bags, glass jars, all the way to vape cartridges, vaporware, to highly customized branded packaging with our clients' logos on them, to different accessories such as lighters and grinders, and also to value-add services such as helping our clients navigate legal regulatory compliance rules, and also helping them customize and build their brand, as well as providing services around label application and different branding elements that they can add into their business. That's still our core part of our business, but we're also doing some B2C, some business to consumer activity, where we're looking at taking a lot of the products that we already offer to our business clients, offering them directly to consumers. Obviously a totally different business, totally different price point, something that's non-competitive, but it is something that we can also invoke to add more additional revenue streams and help build our presence amongst the cannabis community. And through those two channels, we want to continue to have brand development, where we're bringing proprietary products or branded products into our different channels and able to get them to our clients. That is something that's a little bit different and something unique that they can't get anywhere else. And so we've started to build a portfolio of these branded products, and we'll get more to that later. So we look at our business to consumer, our business to business side of our business. We have Kush Bottles, obviously the company we started in 2010. Our core business being packaging, supplies, accessories, and branding services to, again, cannabis dispensaries, retailers, growers, and processors. That is still a staple of our business. Recently, on May 1st, we purchased CMP Wellness. They were a leading distributor of standard and custom vaporizer products, including pens, cartridges, and accessories. We've now integrated them into our Kush Bottles platform. So now, as a combined entity, we're able to offer all those products across our array of customers in all legal states. Looking at our B2C business, we have terpsonterps.com, which is an online retailer knowledge base for authentic terpenes and cannabis science. We recognize, as the cannabis industry is evolving, the need to be up to speed on science and how it relates to different infused products is important for our clients. And so we've invested resources in being able to provide terpene oils to our clients, which again have no THC or CBD, but also some science behind that, so that they're able to utilize our products and combine it with their THC products on, of course, their premises, as we don't touch any THC on our premises. But it's a huge value add for our clients. This site not only allows businesses and consumers to purchase terpenes, but acts as a knowledge base so that businesses and infused products makers can get up to speed on how terpenes can positively impact their products. We also purchased Rollable on May 5th. Rollable is a website that offers a proprietary product, the Rollable. We have exclusive use and rights to this product. It's patent pending, highly branded. The consumer site has a lot of traffic, a lot of eyeballs that come to it every month. And this is a good foray for us into selling products directly to consumers. The Rollable is a collapsible silicone water pipe. It's a very unique product and something that we see a high demand for in the marketplace. We're also in a soft launch phase of MidnightToke.com, and Midnight Toke is basically an online smoke shop where we take all of the products that we offer to our B2B customers and we position them directly to consumers, so that consumers looking to purchase a new vaporizer or a new pipe can actually now do it online through Midnight Toke. So looking at our brands and IP, as I mentioned, something that remains core to our strategy moving forward, to continue to develop patented products, to continue to develop branded products or proprietary products that no one else has access to, that our clients and our consumers can get only through the Kush Bottles network. Here's an example of some of the products that we've brought to market. We have Bud gloves, which is sort of like a Kleenex for the cannabis industry. These gloves are standard practice that everyone needs to use when they're handling cannabis. And you can only buy Bud gloves directly through Kush Bottles. It's a branded product. We also have the Snap Cap tube, which we recently were awarded a patent on the customizable feature on this tube. We believe our tube is now superior to any other tube on the market due to that patent. We sell over 1 million of those tubes a month. We also have our Grip and Glide bag, our Kush bottle, of course, our Kush and Slide bag, and our Kush and Turn bottle, which again are branded products that we've brought to market. And then we have the Kush canister, which is a new product that we're bringing to market soon, and it's a proprietary product using some IP that our manufacturer owns, as well as a design that we've collaborated on, and it's exclusive to Kush Bottles. And then, of course, the aforementioned rollable, which has a patent pending on some of the technology behind that product, collapsible water pipe that's very popular, especially with on-the-go cannabis consumers. So now we look at our reach. We have a very broad and diversified client base. Last year we serviced over 4,000 business accounts. That's consistently grown year over year as our business and our sales have consistently grown year over year. We have a value-added evangelical sales force. What that means is we actually have boots on the ground that are interfacing with these key cannabis stakeholders at these licensed businesses. In a very new and emerging industry, it's key to have boots on the ground, people that are knowledgeable about our products, that are knowledgeable about the compliance and regulation in states, and are also knowledgeable about how to brand and differentiate yourself in the marketplace. Having these folks out there communicating and advocating on our behalf also gives them the ability to now pitch about products that are new in the marketplace. So when you're in an emerging market, there's not a lot of resident knowledge, and so where we have an opportunity is to actually educate the marketplace on which products they should be using and why. We believe we're very well positioned to do that, and so now as new brands and new products come into the marketplace, they're going to want to go through the Kush Bottles network so that they can not only get distribution of their product, but more importantly get education to the marketplace about why their product's important. We're also very strategically located in the major cannabis markets. We have now 4 facilities that we own and operate. Each of our facilities has both sales and operations fulfillment staff. We have a facility in Denver, Colorado, Woodinville, Washington, outside of Seattle, and Los Angeles. And then, of course, we're headquartered in Santa Ana, Orange County, California. We also have licensed exclusive distributors signed on in Puerto Rico and Hawaii, and we're working on signing on another distributor in the state of Alaska. This gives us physical presence in remote states and markets where it's cost effective to now ship in bulk to our distributors, and they can actually be on the ground distributing product to the local cannabis businesses in those markets. So now we look at our multifaceted growth strategy. It's pretty simple. We look at growing our business over the next few years by, number one, adding new products. Again, there's what I mentioned, the branded and proprietary products, but also just expanding SKUs across the board. So we want to be able to offer anything that is important to our clients, anything that's hot or popular in the marketplace, and we expect to continue to be a one-stop shop for cannabis businesses and consumers by continually adding new products to our portfolio. And then the more products we add, the more channels we want to push those products through. So we look to get into consumer channels. We look to get into different points on the supply chain, as we've been doing in the business-to-business channels, and we look to get into new geographies where we can actually market our products to new business owners in states that have just legalized and have their programs coming online, and we can actually get to these business owners before they bought any sort of products from anyone else. So really a first mover advantage that we now recreate in every new market that comes online. That's the beauty of the cannabis industry being regulated state by state, is we don't have to be everywhere all at once. Right now our focus is on the 8 states that passed in November and getting good penetration and market share in those different states as opposed to having to be, again, in every single state overnight. It's a unique environment, and we plan to continue to execute and be a first mover in those markets. And then, of course, growing existing wallet share with our clients, right? That's an easy way where, if we're adding new products and our clients and our sales reps are able to upsell, that's additional revenue that we're just getting out of our existing book of business. And then making strategic acquisitions and leveraging strategic partnerships is going to be a part of our core strategy going forward as well. Looking at the acquisition strategy, we're in a very unique situation. Number one, because we're in the cannabis industry, and so that it has its own set of opportunities and challenges. And for a lot of businesses in the space, there's not a whole lot of access to financing. So there's no traditional debt available. A lot of these banks are not lending to the industry because of the stigma or because of the federal illegality. A lot of the equity financing options are unfavorable to entrepreneurs. So an entrepreneur wants to raise a few $100,000 and they're asked to give up half of their business. It's not a good proposition for a lot of these guys. So we're in a different position. We're a company that's public. We're a company that's more established. We've been around since 2010. So we're in a better position to actually raise capital. Plus, with our public stock, we're able to use that as a currency to actually make acquisitions, and we've demonstrated that. So what that means is we can actually proposition to founders and entrepreneurs that are running a nice business but need growth capital to do an acquisition where they become a smaller piece of a bigger pie. They can stay on board, they can continue to build their business and grow their business, but they get not only the capital that they need from Kush Bottles, but they also get the resources and can plug into our infrastructure, an infrastructure that we spent years building out. We have a full marketing and technology department with web developers. We have a cloud-based ERP system that we use. We have a full supply chain and sourcing team. We have custom graphic designers on staff in-house. We have a full accounting department. So a lot of this infrastructure that these smaller companies don't have, they can now plug into ours and actually be more poised to grow their business. So it's a unique situation. On the next slide, we look at that platform a little bit deeper. We have significantly invested in our personnel, in our facilities. We're one of the few companies in our sector that have multiple facilities across multiple states and boots on the ground in all the major territories. We have invested in technology, getting a cloud-based ERP system that scales. We have the systems and we have the team that we can get an acquisition strategy done with, and we believe that there's ample opportunity right now in the market space. We've done 3 acquisitions to date. As Alan mentioned in the preamble, we did acquire our exclusive distributor in Colorado back in 2015. That deal was done mostly with stock and a little bit of cash. On May 1st, we acquired CMP Wellness, which was largely done in stock as well. The details of those transactions are filed in our 8Ks. And then we also acquired Rollable, which again was mostly a stock deal, had a cash component to it as well. But we're structuring these deals to be accretive, to incentivize growth from them, and we believe that the acquisitions we made and the teams we've acquired are going to enhance our value proposition not only today but in years to come. So looking at that team, our leadership team is, of course, myself as a co-founder and CEO of the company. I come from a background of athletics, college athletics, and entrepreneurism, where I have started several companies, including a small exit with my first company. And I'm going to continue to bring that entrepreneurial zeal to the organization. So it's in the dynamic marketplace. We need to be nimble. We need to be able to react quickly. We need to be able to be forward-thinking and innovative. And I think we've embodied all of that throughout the years, and we're going to continue to do that. We have Ben Wu, who's our president and COO. Ben comes from private equity background, spent 8 years at Wedbush Capital looking at 1,000 deals a year, purchasing small entrepreneur-owned companies with the private equity money. Now Ben can bring that skill set to Kush Bottles, and he can actually be the one leading our M&A activity. He's the perfect guy for that, and he's demonstrated success in our 3 acquisitions so far. And then we have Chris Martin as our CFO. Chris has over 10 years of public accounting experience before he joined our company. The reason we brought him on board was to help us clean up our financials and get audited. Chris was able to get us through a complete 2-year audit, which made us eligible to file a Form 10 with the SEC. That Form 10 was approved in June of 2015, and as Alan mentioned, we started trading publicly in January of 2016. In order to be a publicly traded company that's fully reporting like we are, it's important that we have someone like Chris in the CFO position with such a strong public accounting background. Now we'll take a quick dive into the financial overview of the company. Our company trades on the OTC under the symbol KSHB. This is a snapshot slide looking at some of our data as of July 14th. Stock price of $2.33. We've traded as high as $5, especially before the election. We've traded as low as $1.24 in the last year. But we believe that the whole time we've been not focused as much on stock price as we've been on building out the business and continuing to execute on our growth strategy and let the stock do what it does. But ultimately, you look at our third quarter and we see some results that we as a company are very proud of. Revenues of $4.27 million for the, $4.72 million for the quarter. Gross margin of 33%, which remains consistent with historical, so not sacrificing margin to get the increase in revenue. Our assets are at $43 million. A lot of that is goodwill from the acquisitions, but our hard assets, our inventory, our cash, etc., is relatively large compared to other companies in the cannabis industry. Cannabis industry, as I mentioned before, is traditionally an underfunded industry, and we're one of the few companies that have been able to access some more capital due to the fact that we're public. We've been able to do acquisitions and garner more assets. We do have $4.17 million in working capital, but working capital is key for our business as we are a business that moves products. We're not a technology business. And so every time we want to grow, we have to buy more inventory, we have to ship more inventory. So being able to have that a decent amount of working capital gives us flexibility to really grow our business. And we're continuing to invest in things like inventory, which are a competitive advantage. In a new marketplace, forecasting is tough. When new states come online, nobody knows how much product they're going to need to meet the demand. So when people call us and we have it in stock, in a facility near them, and we can ship it to them next day or same day in some cases, it's a huge competitive advantage, and we end up getting a lot of business because of that. This next slide shows our comparative quarterly revenue via some graphs. We look at our consistent year-over-year growth by quarter, and our growth last third quarter, if we look at third quarter of fiscal 16 versus third quarter of fiscal 17, we were up over 103% in revenue. We expect to be able to continue these trends due to the promising markets that are opening up in California, Nevada, and Massachusetts, along with a lot of the other things in our strategy that are going to allow us to diversify and further build revenue. So it's exciting to be a part of a growth industry. We know the industry is growing. We need to keep growing as well to not only keep up with the industry, but further gain market share. This next slide looks at our balance sheet summary. As I mentioned, we do have a good amount of assets on our balance sheet. This breaks it down a little bit further. We have the only debt that we have on our company is debt that we acquired through acquisition. There's some short-term debt there, payable as a note for some of the inventory we received. But a lot of that is a long-term debt that is payable upon an earnout, successful earnout from the management team that we acquired, and that earnout is paid once growth goals are achieved. So we look at an acquisition not for the value it's going to bring us today, but really the value it's going to bring us in a year or 2 years' time, where we're actually tasking the management team with continuing to grow the business that we acquired aggressively. All right, last slide looks at key takeaways. Kush Bottles again, we are a highly dynamic distribution platform focused on the cannabis industry. So we are something that's going to spread across the whole industry. When you're looking at Kush Bottles, how many customers are we touching? And it's not about if one of those customers does well or if 10 of them do well. We know across our broad range of customer base, there's going to be a lot of winners. There will be some losers, but ultimately we're going to rise as the tide rises. So we are always going to remain very diversified, work with a lot of different businesses in the industry, and we believe that there's going to be some really big players that come out of the early stages of this industry, and hopefully our relationship is strong enough that we can ride those guys all the way to the top. Our unique relationships with growers, dispensaries, and manufacturers and ancillary companies will provide us first mover opportunities in all new markets. So we have different groups that are successful in one market, want to open up a shop in a new market or an operation in a new state. We're going to be able to ride that wave with them as they grow and advance. We've invested heavily in our team, in our systems, and in our infrastructure, and we believe that we're poised to take advantage of really rapid growth in the upcoming opportunities that are going to be presented in California, Nevada, and Massachusetts, as well as internationally. And we believe that due to the unique challenges that face the cannabis industry around financing, around federal illegality, that we're very well positioned because of the fact that we're public, fully reporting, we have access to capital, we have a strong balance sheet, and we've built a great platform that we can lead a consolidation effort where we're able to make several acquisitions over the course of the next few years that are very meaningful to the business and further diversify and help grow our profile.
All right. Well, thanks for that, Nick. That was very informative, and we have a lot of questions starting to flow in. I'd like to remind everybody you can type your question in, and we'll get to it momentarily. I had just a few I wanted to start with, if that's all right, Nick.
Please.
So the first one is, your growth's been very high. Obviously, the acquisition, which was just 1 month from C&P Wellness, helped Q3, but in general, it's been about 50%, give or take, annual growth each quarter. So looking outside the acquisition, just at your internal growth, there's a lot of different things that are helping you guys to grow, including, like you said, new products, new channels, and new geographies. Can you kind of break down what you think has been driving the growth over the last year, put it into those buckets?
Absolutely. So I think, if we look at the acquisition, obviously bringing the vape cartridges and batteries and that whole side of the business, that's huge for our growth. We haven't recognized a ton of that because the acquisition is relatively new, but we believe that will be a huge part of our business. So we expect that bucket to really grow as far as the new products goes, especially due to that acquisition. But we've also seen our business grow a lot in the custom packaging. So you could kind of look at that as a new product or really a new service where early on in the market, a lot of these businesses, again, underfunded, smaller, didn't have the volumes, didn't want to spend the money to really differentiate their packaging or brand themselves. Over the last few years, we've seen a great influx in our business on the custom packaging side where people are now better funded. They've now grown their business. They have the volumes to justify it, and we have the expertise to provide it. And so we've seen custom packaging and that side of our business grow. So I guess that would lend a little bit to the new products as well. As far as new geographies go, we've certainly seen Oregon be a market where we've really ramped up. Washington State, we see consistent 100% year-over-year growth in that market the last couple of years. Colorado is a more mature market, so that has not been a market that's been growing as much for us. But Nevada, just recently coming on in July, we've had a large influx of business from that market. So I believe that if you look at those categories, really most of our growth has been from the new products and the new geographies. The new channels, I look at that being more like the consumer channel, something we haven't received a ton of traction on yet, but it's something that we're now starting to put resources toward and expect to be a good growth driver for the future.
So when you and I ran into each other in March, I said you guys should be using your stock to make some acquisitions, and sure enough, I don't know if you took my advice, or you were already ahead, probably already ahead knowing you. But that turned out to be just a great example of how a public company can use its stock to acquire a large company at a reasonable price, or what seemed to be. I'm curious going forward what your M&A strategy is going to be. I hear from a lot of small people that reach out to me. They ask me about you all the time. I imagine you see a lot of that inquiry as well.
Yeah, absolutely. So looking at that CMP Wellness deal, that was a deal where certainly accretive for the company. We outlaid an initial $21 million purchase price, and there's an earnout after a year and a little bit of earnout along the way. But that comes with growing the business. So we look at the initial outfront capital lay. It was out of the 21 million, it was 1.5 million in cash. The rest was all in stock. And so what that means is that the folks at CMP Wellness really value being a part of Kush Bottles. They see what we're doing and what we're building, and they're willing to take a lot of that buyout in stock and ride the upside. We believe that if we continue to execute on our plan, there will be a lot more entrepreneurs that see the value in getting that stock. So that's going to remain as a strategy for us going forward. As we look at who do we want to acquire, where we look at rolling up businesses, there's a couple different buckets. Obviously, anything we do, it depends on how easily we can integrate it into our platform. So if it's a competitor or quasi-competitor, very easy. We can just integrate their products. If they have a facility that we want to integrate, we can get that up and running, or we can just bring everything into our facility network and just eliminate their operations and consolidate it and make it more profitable. If we're looking at a business like a CMP Wellness that is selling into the same market but different products, now we want to look at the team. We want to make sure that the folks that we're bringing on board have true expertise. If they don't have expertise and they're not experts, then we can just build it ourselves. But if they're people that have differentiated themselves because of their expertise, they have unique product manufacturing relationships that we can leverage, then that becomes something that adds a ton of value to that new program, and it's worth making an acquisition. Also, the customer list, if it's something that we can now cross-sell, and they're selling products to a certain segment of clients that we're not selling our products to, but if we integrate, now we can sell all the products to the entire customer list, it becomes more attractive. It's a phrase that people say, 1 + 1 = 3, where you're actually able to get synergistic value above and beyond just the immediate value of the different customer lists and books of business. So that's a little bit about our strategy, but ultimately we're always going to have our eyes open for opportunity. This market is moving fast, and I think what differentiates a company like ours that's specifically focused in the cannabis industry than an outside business that's dabbling in the cannabis industry is we're more in tune with the market and where it's moving, the different trends, and so we want to invest in things that we think are going to be trending upward, and with our unique knowledge and our understanding from being in the industry and entrenched, we believe we're in a better position to make those calls than somebody on the outside who may be coming in that has capital but doesn't necessarily have the know-how and knowledge that we do.
Right. So one of the biggest obstacles for rapid growth companies like yours can be management bandwidth, and you addressed your key team members. And I know you've put out some press releases regarding your expansion into other states and some key hires that you've made. But just big picture, what are you doing to make sure that your management team has enough bandwidth, Nick?
So our strategy is that we are going to continue to bring on professionals that have expertise in different areas that we don't have, right? We only know what we know. And so by leveraging skill sets and people that have been around in other industries, and they can bring that and integrate it into our company, it makes us as a company much more valuable. We saw recently we brought on a couple of key hires, Ed Pratt as our VP of Operations and Sales. Ed is a very experienced individual that was previously running a $15 million business before joining our team, and he's somebody who we are now leveraging to really revamp and expand our entire sales program, as well as refine and dial in our operations. We also brought on Kevin Nguyen, who was running a global demand planner, running the supply chain for Incipio, the phone case company. he came on board, and now he's in charge of running our supply chain. So we recognize that there's other industries and businesses that have been there and done that, and if we can take folks from there and leverage their expertise and bring that into our business, we're going to be much further ahead. The industry as a whole is evolving. Early on, it was hard to convince somebody to leave a regular, more corporate, mature industry and come join this crazy, unique cannabis industry. Well, that tide has all changed over the last really year and a half, where now people are wanting to come join the cannabis industry. They're excited to join the cannabis industry, and they want to get a piece of the pie before it gets too big. But they also want to join a company that's stable. They want to join a company that's not going to go out of business, that's not going to run into compliance and regulatory issues. And so the fact that we're public, the fact that we're established, and the fact that we have a strong balance sheet makes it a very attractive option for really talented senior management and executive folks that are looking to join the industry.
I just have one more question before we open it up to the participants, and that is, I get this question a lot, and you guys obviously have some commodity business, but also some very proprietary stuff. What separates you from the competition, Nick? You talked about this a little bit, the geographical presence and some of these proprietary products, but you know, for people looking at the space, you guys are very visible, but there are a lot of other players out there. What makes Kush better than the competition?
You know, I could spend more time than we have answering this question, but in a nutshell, right, I think we look at what we've built as being something that's very unique. So we have the infrastructure, as you mentioned. We have the multiple facilities. We can ship product efficiently and effectively. We have the relationships where we've actually put our faces in front of our clients' faces, visiting them, educating them, helping them build their brand through our custom packaging design and our expertise around that, helping them navigate compliance and regulatory pitfalls, where we actually now not only attend regulatory meetings, meet with regulatory bodies such as the MED in Colorado or the Washington Liquor Control Board, but so much that even in Oregon, when they were developing their rules, they engaged Ben Wu, our president, to actually join the packaging rules committee in Oregon. And right now we're in the final stages of hopefully being accepted to the Bureau of Marijuana Regulation here in California's 25-person advisory committee, so that we can help them as they craft their final regulations around packaging. So having that expertise, being entrenched and knowledgeable about what's not only happening currently, but what's expected and coming down the pipe based on our knowledge of several states that we've worked with, we can be a really value-add partner for our clients. So there's that whole side of the business that I think differentiates us. But there's also the brands and IP. So that's why that's a big focus and a whole dedicated slide in our deck, is because it remains a strategy that we're going to continue to develop. We want to have differentiated products in the marketplace. We can differentiate those products by branding them, by protecting them with patents and IP, or by leveraging partnerships to get exclusive rights to distribute products. So we're going to continue to do that and make our product portfolio more defensible. So that's a few reasons right there in a nutshell. But you know, we do talk about this a lot. So you know, if I'm on another presentation or at a panel, the question always comes up. There's a myriad of different reasons that we really are unique in the marketplace and have something that other companies can't offer. And there's a reason customers continually come to Kush Bottles for their needs versus going elsewhere. Because as you mentioned, you can purchase other products elsewhere, but we're a one-stop shop. We make it easy. We service our customers very well, and we've gained quite the reputation in the industry for doing all that.
Okay, now I'm going to turn to some of the questions we got from members in the audience. And the first one, you talked about the adjacent move into the B2C space. And the question is, do you worry that selling direct to consumer could cause a conflict with your B2B clients?
Yeah, it's a good question. Number one, the products that we're selling direct to consumer are more of the glass pipes and the different ancillary products, the lighters, the grinders. You know, even the terpenes that we're selling direct to consumers are really different than the products that we sell a lot to our core businesses. Those products represent a smaller portion of our B2B business than our core packaging products. The packaging is something that is an item that they need, the businesses need, and they pass it along to their consumers. The other products, the glass pipes and those types of products, are something that the businesses buy and then resell to the consumers. So we have a price that we sell it to them. We have a suggested price that they resell it for, and then if you go to our consumer website, the price is even higher than that. So our businesses have the opportunity to undersell us. They have the opportunity to interface directly with the client face-to-face in the dispensary storefront or the retail storefront. So the only reason a client would go online to buy from us is because, number one, they don't shop at a dispensary that has the products, or our dispensary client chooses not to buy those products from us, or number two, they want to have the convenience of ordering online and shipping to their home, and they're willing to pay a premium for that. So as far as to avoid that conflict, we believe we can do that with price. And again, the conflict only exists for a small subset of our products, not our whole range of products, because most of our packaging, most of our vape cartridges, most of our batteries, things like that, those are geared really toward businesses and not going to be sold direct to consumers.
All right, that makes sense. The next one's kind of a big picture question. Is there anything you now know that you wish you would have known when first starting in the cannabis industry?
That is a great question. You know, without giving it a thought, I could probably come up with a better answer. But I will say, you know, one thing that I wish that we did know is that the regulation at the federal level around public companies was going to be something that was going to be progressing a little bit further. I think, you know, it's still a little early to be determined, but we see a lot of companies having a ton of success up in Toronto on the Toronto Exchange, and I'm not saying that that would have been a better avenue for us, but right now we're really looking forward to some changes in how investment bankers are able to treat public companies in the U.S. and how the larger exchanges such as NASDAQ and NYSE are able to list cannabis-related companies. So I think it's a little too early, but that could be something where, you know, if there's not significant progression, I mean, our company, our desires are to move onward and upward, right? And so when it's time for us to move to a larger exchange, we'd like to be able to do that, especially if we have the fundamentals in the business that meet the requirements. But if we're actually now in a position where we can't, simply because of negative stigma or federal illegality, it's going to be a little bit disappointing. So I think that's something that we're going to pay attention to, and it may end up being something where if people in the Toronto market or some of these other exchanges are able to invoke all the privileges and rights of any other business, yet we're not here in the U.S., it's going to be frustrating, something that we may second guess. But as of now, we're still feeling confident, and we believe that we're going to stick to our strategy, and we hope that these things will open up and develop on their own.
Okay, our next question's kind of similar to one of my earlier questions, and just looking at your recent acquisition, for instance, are you seeing penetration into your existing customers? You know, were you able to cross-sell? And then also, what type of percentage increase are you experiencing from your current customers? I guess that's another way of trying to figure out your growth. Is it coming from current customers or new customers?
Yeah, absolutely. So there's a slide we used to have in our deck. We don't include it anymore, but it was a slide that showed customers, you know, single customers' annual spend in different buckets. And so we looked at in the year 2012, I believe, we had no customers spend over $50,000 with us. Then the next year in 2013, we had a couple, and then in 2014, there was a few that spent over $100,000 on an annual basis with us. And now we're to the point where this year in fiscal 2017, we may have a customer or two that spends over $1 million with us in the year. We're very diverse. We don't have a lot of customer concentration, but just the fact that we're seeing customers reach into these new buckets shows us that there really is a lot of growth to be had just from our existing book of business. these guys are growing. I mean, that's the unique thing about the cannabis industry is, we started with a client in one of the legal markets that was, doing, 100 to 200 grand a month when he first started. That same client is now doing well over $2 million a month in cannabis sales. So as his business has grown, obviously the amount of spend that he's had with Kush Bottles has grown. And their needs have diversified as well. So what we see is a lot of companies that were traditionally a retailer or traditionally a grower now moving into other segments in the market. So that same grower is now also processing oil and becoming a vape cartridge client of ours. That same customer is also now opening a kitchen and making edibles and buying some of our larger format products or our branded custom bags. So these clients are diversifying their businesses, and as they do that, there's more needs that we can meet with our product portfolio, and the feedback that we get is, wow, this is great because we can just do it all through you. So that's our goal, is to be able to allow these guys to expand their business and do it all through our product offering. To the first part of that question about the acquisition and the cross-selling opportunities, certainly we've began to integrate the cross-selling across, starting with the major accounts that CMP Wellness had, and also with the larger accounts that we have that weren't buying the vape products from us already. We've done it as well through training, so we're getting the folks at CMP Wellness to visit all of our new hire trainings, to visit our different sales trainings that we offer for our outside and inside sales staff, and they're able to educate them on how to sell their products. Vice versa, we've been sending folks from Santa Ana up to CMP Wellness's facilities in LA, bringing packaging with them that they can stock on site. So when clients come by, they can show them, and then teaching them about the different packaging products and how to sell it. So it's a longer process. We have seen some direct results, but we're putting in the building blocks to really leverage this as a synergistic cross-selling opportunity across the board, and we're going to spend really the next year executing that, and we believe after that we should have most of the, at least, low-hanging fruit done, and we should be seeing results from that.
And then your inventory did pick up Q3 from Q2. I assume that was from CMP Wellness. Is that correct?
Correct. Yeah, we acquired inventory from them, obviously another physical location, and it's stocked with higher dollar products. Those vape cartridges, when you look at the space that they take up versus the dollar amount, it's a bigger ratio than our kind of core suite of products. So that was a big driver for that. But we've also added several other SKUs, and so we had to stock those across 3 facilities, and we're continuing to add to our one-stop shop model, and that requires significant spend on inventory over the coming years.
Yeah, I guess if you're trying to fulfill your mission, out of stock is not going to be a good thing to be telling your clients. So.
Exactly.
Okay. The next question is, where is Kush in the process of getting uplisted to a major exchange? You kind of started to talk about that. Obviously, you're not quite there yet.
Yeah, exactly. But it's a good question. I could touch on a little bit more without giving away too much information. But the company, is in a position where we currently don't meet all of the quantitative and qualitative requirements to list on some of these larger exchanges, but we're very close. So over the next 6 months, we plan to be putting in some of those, making some moves so that we can actually meet those requirements. Some things like having an independent board. We need to add a few independent board members. Having different committees, such as an audit committee, compensation committee. Some of the corporate governance stuff, right? It's stuff that is easy to do, relatively easy, but we just need to focus, and we need to find the right people to fill these roles and build this out. So we're going to continue to execute on that. As far as where our stock trades and what our public float is, we're very close, if not already meeting most of the requirements. So we're not concerned there. The big thing is really about which exchange and having those conversations with them to where they understand our business enough to allow us to list on their exchange. So a lot of times we get, I guess, stigma shock, you could call it, where we talk to a business, and this can be, a landlord, or this can be a bank, or this can be, some sort of financial institution, and they see the name, they see the industry that we service, and they don't really want to learn anything more about the business. So we're now in the position of looking to tell that story to some of the larger exchanges in hopes of them really getting to understand our business and accept our business as somebody who it's not touching the plant, we're not touching the THC, but we are providing compliant products for the industry, products that are necessary and required by state law, not only for THC-infused operators, but also for CBD operators. A lot of our cartridges and products are for folks that are putting CBD and hemp-based oils into it. Now, CBD derived from hemp is federally legal. There's federally licensed farms that are producing this hemp. We're also selling products into Canada. Canada is a federally legal market. So a lot of our business is not with state legal, federally illegal operators. A lot of it's actually with state legal and federally legal operations. So telling that story, getting out in front, and having people really understand and dive deeper in our business is where we're at right now, and sort of getting green lights from different exchanges, and then doing a lot of the other back-end work along the way. That's our strategy. So we don't have any sort of date, but we know that our business is growing, and as we grow, we want to continue to grow not only as a company, grow our revenues, grow our team, but also grow our professional services and the exchange that we list on and all that as well.
Okay, the next one's a pretty quick one, but it's just a responsibility for doing due diligence on new business opportunities. Is that Chris was the question? Who's heading up your kind of business development?
So we have Ben, who has the strong private equity background, M&A background. So he's really the one that's running point on structuring deals. When it comes to looking for opportunities, we're in a position as a market leader where a lot of these opportunities do come to us. We have a lot of different consultants that we work with, a lot of different strategic partnerships that we have, and those tend to lend to introductions or conversations with potential additional partners or potential acquisitions. So we're kind of getting this stuff from all angles. To be quite frank, right now, I don't think our issue is lack of opportunity. I think really our issue is making sure that we're being prudent about what we're doing with our capital, about how we're integrating these acquisitions and building out our platform. And then when we feel the time is right, we know there's opportunities that we can go pick up in the marketplace just based on our constant building of our network.
All right, the next one. Do you think your patents are strong enough to defend against giant packaging companies as the supply side of the cannabis business evolves?
Well, certainly if we have a patent that's granted by the federal government, it's as strong as any other patent as far as its actual protection. What I think you mean by the question is, do we have the capital to spend, right? Enforcing it, and so that is a big piece, of how well do we defend our IP, how much capital do we want to spend, and as we grow as a business, as we raise capital, obviously there's larger budgets that we can put toward things like legal for defending our IP. The Kush canister is a product that we developed using our manufacturer's IP. This manufacturer spends over $1 million a year defending their IP. We have exclusive rights to that product. So that's an instance where we've accomplished the goal of getting proprietary product into our portfolio, and we've leveraged a business that we know can spend their capital to help us defend it. So and that's another strategy that we can continue to invoke. But we want to be in a position to defend our IP. We want to be in a position to defend our brand. And we believe that with the Trump administration in place, we may have another 4 years where we can continue to operate without that threat of very large businesses coming in and trying to disrupt us. And if we have 4 years and we continue to grow at the rate we are, we're going to be in a total different position to now really be at a level where we can defend ourselves and go toe-to-toe with some of these larger companies because we've had the runway to build our business.
Interesting perspective. So trouble at the top with the federal government's good for you guys.
Exactly. It's a catch-22. I mean, I was telling people this before the election, that, the most important thing for that election for cannabis, period, was the states. We needed to get all the states to pass their measures, and they did. 8 out of 9 did. So we won that battle. But as it came to the federal government, or as it came to the presidential election, that actually was a catch-22 because we had one instance where Hillary Clinton could have easily won the election. The market would have responded very well to cannabis stocks, in my opinion. People look at Hillary as a Democrat, as someone being more progressive when it comes to cannabis laws, and the potential for a full-blown federal legalization of cannabis within 1 to 2 years of a Clinton presidency. So that's where the momentum and the public support for cannabis stocks would have come from. But in my opinion, that could have been a little bit naive because Hillary Clinton is very tied in with the pharmaceutical industry. She could have very easily done a federal cannabis legalization that was highly advantageous to big pharma, something that cut out the little man. So really on the face of it, it would have been great, but on the back end, it could have been very detrimental. Now, on the flip side, if candidate Trump won, which he did, I knew what was going to happen is people were going to get scared. People were going to run away from cannabis because they know that Trump, as a Republican, doesn't have as strong of appetite for a full-blown legalization. But under the Trump presidency, we have this unique opportunity where some of these larger guys are kept out, and if the Republicans stay true to their states' rights, then we have an opportunity to build our business state by state, not have to be everywhere all at once. And over the course of 4 or 5 years, now we've built out a giant platform that's almost national. And when that federal or national referendum does come into play, it's just one more step that we have to go to be complete. So that it's an interesting time to be in the industry, but that's how you need to really look at it is is this an opportunity or is this a threat? And obviously, we're taking the vantage point that this is a huge opportunity.
Okay, I don't know if you can answer this one, but I'll give it a shot. Somebody want to know if you're giving any sort of revenue growth projection for FY18.
So we as a company are not giving any growth projections. Obviously, Alan disclosed some of the projections that are out there in the financial community. Those did not come from us. But I will say that we feel very confident in our growth strategy. If you look at our historical growth year over year, combined with the fact that there's now actually going to be new opportunities in these big markets, California, Nevada, and Massachusetts, we feel very confident that we can continue to execute our business plan in lines with what we've done historically.
Okay, and then the same questioner has a really good question because things are about to change in California. And I know you guys on an annual basis, at least last year, you started to break out where your business is coming from in terms of geographies. And so the question is, how much of a share of your business do you expect California to be in the future? So can you just kind of talk about how the changes in kind of a highly unregulated California moving to a regulated California may benefit you guys?
All right, great. I'm glad this question came up. It's something that I have to work hard to not get too excited about California because if you just look at, nobody knows the future, right? We can't predict it. But if we look at some of the historical stuff and do some analysis, it gets really actually quite scary of how big California can be as a market. So we obviously have high expectations, but we're trying to be very conservative in how we predict and estimate our growth in the state of California, just because, again, nobody can truly predict the future, and we've seen states roll out programs effectively, and we've seen states roll them out very ineffectively, and so a lot of it is outside of our control and really up to how the regulatory bodies get this thing done in California. But if we look at the business in California, so a couple things to identify. Number one, ever since we've operated in California, ever since medical cannabis has been legal in California, there's been zero requirements around how it's packaged. So what that means is for years we've competed against Ziploc bags in the California market. Well, in 2015, the governor approved regulations for the medical program that did include child-resistant packaging. Those regulations were ultimately now blended with the Prop 64 AUMA to create one marijuana system under California, which again has child-resistant requirements for packaging. So any way you cut it, we are going to get child-resistant packaging for the first time in the history in the state of California. What that means for our business? Well, let's look at Colorado. Colorado is a state where there wasn't a lot of regulation around the medical program. In 2014, January 1st, they opened up their adult use program that also had child-resistant requirements. We weren't as strong in Colorado as we are in California today. Back in 2013, we weren't as strong. But our numbers were very impressive. We went from $30,000 in sales in the year 2013, don't quote me on that, to over $1 million in the calendar year of 14 in Colorado. And a lot of that was attributed to the growth of adult use, but a lot of it was contributed to the fact that now regulation was enforced and people were needed to go with a compliant solution such as a pharmaceutical grade child-resistant vial in order to be able to sell their products. So we see that coming to California. We see adult use coming to California. We believe California's medical is more established than Colorado's medical. So I'm not going to say that they're going to get the 20 times sales increase in cannabis sales that Colorado saw, but I think it is conservative to say there's going to be a 10x increase in California at some point. Again, it's determined upon when the regulators roll out the programs and how they roll them out. But at some point, there's going to be a huge influx in cannabis sales. We're in a position to now provide compliant products for the state. It's our home state where we've been fostering relationships since 2010. We believe that California is going to be a significant part of our business moving forward.
Question from the audience about Canada. I know you guys are a little bit active there. I believe you are, but question is, what are your plans there? And if you could also hit Massachusetts, because I think that's a big state coming on.
Yeah, absolutely. So Canada, a federally legal market, but a very different market than the United States currently. So in Canada, everything is shipped by the licensed producers via mail. We believe that well, I think it's been announced that Canada is going to go recreational legal here at some point. When Canada does go recreational adult use legal, we believe our products have a much more viability in the market. Right now, we are doing some business in Canada. We believe that when it goes recreational adult use legal, people are going to want to do custom branded solutions. They're going to want to do differentiated products, and they're going to want to expand their product SKUs. Right now, a lot of these licensed producers just ship a few different products to their whole list of medical clients via mail. When you're shipping via mail, you don't care about branding as much. They don't have to compete for customers. Right now, customers sign up with a licensed producer, and then they now can only buy from that licensed producer, and it's a monthly recurring shipment. So for now, it doesn't create a lot of value to spend more money on your packaging. In an adult use market, it will. So we expect our business in Canada to grow. We're also currently looking for, we're talking to a few folks, but also looking for more strategic partnerships in the Canadian market. Hasn't been as big of a focus for us, but certainly something we have dabbled in, and we want to definitely make some more inroads in. As far as Massachusetts goes, it's a market where we do have clients. We have clients up in the Northeast in the medical markets there. We do not have a strong presence as far as a physical presence goes, but it's something that we're going to look to put in place really in the next 6 to 9 months. And the reason for that timeline is we want to be ahead of the curve. We know adult use in Massachusetts is slated to be rolled out July 1st, 2018. Now, it could obviously get pushed back, but with that timing in mind, it seems like over the next 6 to 9 months is an opportunity for us to put more boots on the ground, potentially look at opening a facility in the Northeast, or looking at more additional strategic partnerships in that area. We think Massachusetts is going to be a huge market because, as I mentioned, it's going to get a lot of purchasing from the surrounding states where they're going to come in and actually buy cannabis legally. You know, obviously they're not legally allowed to bring it back to their state, but we all know that that's probably going to occur. And these other states are going to say, well, why are we missing out on all the tax revenue? So we think establishing in the Northeast is not only going to be good for our business in Massachusetts, but ultimately that's going to be a very vibrant market in the states like Rhode Island, Connecticut, Vermont, even New York State. And so why not have a physical presence there where we're able to service all those markets?
Okay, so this is great. We have a lot of questions, a lot more coming in, but I want to respect everybody's time. So unfortunately, we're going to just take a few more questions that have been asked, and one of them from a couple of people, Nick, is there a way that you can leverage kind of your know-how to provide consulting services as well, or are you already doing that?
Yeah, we look at some of the value add that we provide as similar to consulting services, but we don't charge for them. We do charge a small design fee that's much less than if you're going to be working with a traditional design agency, just because we do have to cover costs on time. But we see it as really just a value add to get people into our network and to get them into our product portfolio. Same with compliance, right? When we're educating people on compliance, it's not just so we can bill them hourly, but it's really so they can make more informed decisions around their packaging and their different products that they're offering. So we do that more as a free value add service, but we make it up for it obviously in the business that we get and the relationships that we're able to develop. And some of our largest clients that we have today started with a conversation around regulation and how to navigate it and what types of form factors they can use to package their products. So that's really more of our core strategy. Consulting for us, when we look at that side of the industry, there's a lot of players in that space. There's a lot of different models. We're now seeing people take equity percentages in different grow operations, and that's not something we're interested in doing. We don't want to be a company that touches the plant until it's federally legal, right? And then we can look at it. But for now, and we believe, for the foreseeable future, it's not going to be a strategy of ours, because we want to remain as a company that's investable, somebody that can move up onto exchanges. And if we're touching the plant or more involved directly with growers, taking equity percentages like a lot of these consultants do, we're not going to be able to execute that strategy of being somebody that the vast institutional public can actually invest in, and be a company that can leverage really an ancillary play for the foreseeable future. So that's why we're not too interested in consulting. It's also it's not reoccurring revenue. So most of the things that we look to get into is something that's reoccurring. So we want to sell somebody a product today, but not for the sake of recognizing revenue today. It's really about building a relationship and being able to recognize revenue for years to come. And with consulting, you just don't get that type of reoccurring, consistent revenue. So that's why we're not really too motivated to go down that path.
Okay, and then like I said, there's a lot more questions, Nick. We'll have to do this again, but just one last question. A couple of people were asking. We talked about Canada, but the rest of the world's really heating up. What are your thoughts about international expansion?
Yeah, we are selling products internationally. It's a very small portion of our business. I mean, outside of Canada, we are selling products to Europe. We know that, we saw Barcelona, Cantalloa.
Catalan.
Yeah, Catalan region legalized, and then we also saw for adult use, and then we also saw Greece and Germany for medical, and there's a lot of markets South America as well. So we know that there's going to be opportunities created for us. It's all about where are we going to get the most value for our focused efforts. Currently, that is California, Nevada as well. And then I think Massachusetts, when we just talk about the amount of effort that we're going to have to put in versus the value that we receive, that's the low-hanging fruit. So we want to basically focus and corner those markets. Back to my other statements about kind of opening up to larger exchanges, opening up the capital markets even further, the investment banks. We'd love to be at a point where we can actually raise more capital to take advantage of opportunities we see internationally. But if we don't have unlimited access to capital at favorable terms, then we're going to choose to spend that capital where we can get the most value. And we do believe that's in those domestic markets. But obviously that's all subject to change, and we hope that we get into a position where we can take advantage of international markets more effectively than we currently are today.
Well, hey, thanks so much for sharing this perspective. We do have a lot of questions. We can either collect them ourselves, or is there a email that you'd like to share with the audience in case somebody had a question and we couldn't get an answer today?
Yeah, absolutely. We work with KCSA as our IR firm. They recommend that anyone email ir@kushbottles.com, and either they will answer the question directly, or if it's something that needs to get back to me or management here, they'll communicate directly with us. If there's any analysts or institutional family offices that are listening in that would like to follow up with an additional call, we're happy to do private conference calls as well. And again, everything can be scheduled through our IR firm by emailing ir@kushbottles.com. Also, you can find that online at ir.kushbottles.com, and you can see all of the access to our information of latest news, filings, contact info, etc.
Yeah, so if anybody's looking for more information on Kush Bottles, I'll certainly pitch our investor dashboard, because there's a way to connect directly with the company there. And the easiest way to find that is to go to our featured page and look for Kush Bottles and click through. But I also wanted to point out kushbottles.com. All their social media is very easy to remember, whether it's Twitter, Facebook, Instagram, it's all at Kush Bottles. So that should make it easy. And just one last thing, Nick, I know your year ends August 31st, and you'll be reporting that most likely before Thanksgiving. Is there anything else on the horizon that people should be looking out for?
Yeah, I think our year end certainly. We're going to have that coming out in November. We're really ramping up right now. We're going into the end of our year. We're building our operating budget for our fiscal 2018. That's when we think is going to be just really a breakout year for not only our company, but for the industry as a whole. We're very excited for what is already happening in Nevada as of July 1st. We're very excited for what's going to happen in California. And we believe that the more large states that come online, the more defensible the cannabis industry as a whole is to any sort of federal regulation. So that's why we like to see California and Nevada, some states that carry a lot of weight, that are going to get a ton of tax dollar revenue, in addition to Colorado and Washington and Oregon that get meaningful tax revenue as well, all coming online here very soon. So those are the things that I would look out for is these states and when they're getting online and how their programs get rolled out. And then I'll just say my one last piece in regards to you, Alan, and thanking your team for putting this together and hosting our information on your website so that folks can access it. And I think that's the most important thing to be said about what you guys do at New Cannabis Ventures and 420 Investors. You guys are transparent and you put information out there about companies that are doing things mostly the right way, but also calling out companies that aren't. And I think that's important for the cannabis industry. Is we want to, one of our mission statements and goals is to further legitimize the industry, and so we're doing our part, and you guys are certainly doing your part on that too. So I appreciate you getting that out there and garnering an audience that wants to hear fact-based information about public companies in the industry.
Well, thanks for saying that, and we think you're doing your part too. So to our audience, I want to thank you. This is our first successful live webinar, and we'll have more of these. If you have any feedback, you can email us at info@newcannabisventures.com. I'm sorry we couldn't get to all of the questions today. If you had additional questions that weren't answered, you can email ir@kushbottles.com. Is that right, Nick?
Correct.
Yeah, ir@kushbottles.com. I think that goes to KCSA as well, and they'll put you in touch with the company. And stay tuned. We're at an exciting time. We'll have a lot more things to talk about in the coming years. Thanks a lot, Nick.
Thank you.